Good morning, everybody. Hello, hello, hello. Joseph, nice to see you. Brenda, you too. Good morning, everyone. Thanks, everybody, for jumping in. Okay. So we got some cool stuff to cover today. At the moment, we've got AMC on the chart. As we can see, AMC is having a really nice day. Price is moving up against resistance and broke through its previous resistance already. So we got a nice red hammer candle just because we gapped up. So let's see if we can hold this gap here. But what I have been watching for here on AMC is a sign that we were going to close above this resistance here on this falling wedge, which is part of this larger bull channel. So this is just a little bit of technical analysis for your morning. Coming off of AMC's peak and on the downtrend, this is the resistance line here. Here's our support. And then within that, the most recent trend beginning in mid-September, we had a downtrend that peaked in on the 16th of November at $53.23. And we've been in a downtrend since then. We hit our lowest point at $13.40, which, if you recall, the last time that we were there, sorry about that ringer there. The last time that we were down to this price, we were actually trading back in May of 19, the 19th of May. And this was right about the time that AMC's OBV started doing some really interesting things. So let's go remind ourselves of the history that we had seen on AMC's OBV. If you notice, I charted out some things in order to give myself a little bit better visibility into their OBV. So this is the interesting stuff that I wanted to point out. And as we're looking at this downtrend here, this was AMC's on-balance volume from early November of 2020. And it had these couple of peaks here where the OBV had maxed itself out at 230 million shares on balance. And the price went into this bull channel downtrend for the next several months. And when it hit its all-time low, it was, let's see, the 4th of January, and that was the low on the OBV. The price actually hit its lowest point, same day. But shortly after that, the OBV broke up and through this channel, and then kept going. And notice that the price didn't move all that much. It only went from a low of $1.91 up to a high of $3.20. Granted, that's a 100% move, but with the price being that low on the stock, it really wasn't that big of a move, especially considering that it had been trading at $8, $7 for most of 2020. As we look at the OBV going further, by the time that it was trading at $4.70, on balance volume was up to 900 million. And the following day, it was up to 1.36 billion. And then the following day, when it squeezed all the way to its high of $20.36, the OBV was 2.615 billion. So that's a significant jump going from a negative balance of 280, we'll say, million shares up to a peak of 3 billion at the OBV's peak. At the price peak, it was 2.6 billion. So what I've noticed is that these downtrends or these consolidations of the price seem to match up with the OBV's consolidation, where the OBV is more or less flat. And this was the first and only real downtrend of OBV that we had seen in AMC's history. See, here we had created more of a wedge, and I'm not the most experienced technical analyst, but when I look at this consolidation, or at least it looks like consolidation if we were looking at a price chart, the on balance volume for AMC just seems to wiggle in this consolidation channel, um, with a narrowing wedge that finally terminated on about the 28th of May. And what I found interesting was that there was this same breakdown. And after that breakdown, when the price hit its lowest point at the low of 893, then it immediately broke up and through that wedge. And that began the price consolidating for about 1.5 trading weeks through to May 21st. And I believe it was on May 25th or May 26th that I had called the squeeze based on, the gamma ramp and all those options going in the money and things of that nature. We were already trading with the price closing at $16.41 on that particular day. And at this point, the OBV is more than doubled. It's back up above 3.6 million on balance. We'll say just an estimate, just under it, and kept going. Now I'm looking at AMC's most recent OBV. Here we had another wedge. It looks very, very similar. Might adjust this just a little bit. Let me know if I'm going too fast for you, chat, or if I'm leaving out any details anybody's curious on. Okie dokie. So, here we have the same thing. We have another wedge, and we have this huge breakdown, okay? The price had been falling for a long time now. We normally would see the OBV moving with the price, but in this case, we did not really have that kind of activity. The price continued falling, but the OBV remained flat. And if you remember from our earlier discussion, when we see an OBV that's just flat or consolidating, it usually indicates that an algorithm is being used to push the price down to attack the bid, force the price to drop consistently in a way that is predictable and, dare we say, manipulated in an effort to get a better price on the stock. And each time this bounced off of the bottom of this wedge, we saw kind of a rubber band effect where it bounced back up and the price challenged previous resistance again almost immediately. And what I find very interesting is that now we've broken down and the price hit its lowest point. Price was all the way down to a low of $14.40. We haven't been here for more than 8 months now. Sorry, 7 months. 7 months. And immediately after that, we rubber banded, snapped straight back through this wedge. At this point, I'm looking at this data as though it is a signal of what's to come for AMC. A lot of FUD and a lot of negativity have been circulating around AMC stock, all the meme stocks, and many others. There's GameStop, of course. There's BBBY, BlackBerry. We can go on for a while, but in any case, each of these stocks that we have looked at in the past have shown very similar behavior on their charts. Let's go and take a look at some of these just as an example before we continue on with this little thought experiment. So if we look at BlackBerry, and that huge peaks and then consolidation on the OBV while the price sells off, and then as soon as there's a pop in the OBV, you get this nice big hill. Then there's another run, and then same thing again. OBV is perfectly flat, and then as soon as the OBV starts to curl upward, like BB is actually like a better example. It's a more perfect example, I'll say, because as soon as the OBV goes up like this, I mean the price was trading. Let's see, that's a 15% increase in price. Like it's nice, but it's not a squeeze. And the OBV curling like this was a definite sign that it was turning a corner. Notice that the on balance volume went from 3.45 billion all the way to a massive peak of 4.8 billion, more than a billion, more than 1.5 billion shares on balance. So that was quite a significant spike. And we can look at other ones like Sensionic, Progenity also does it. Yep, here's Sensionic's chart. This one's another good example. So you notice that the OBV is not far off from where it was trading before, even though the price is trading much higher than this. If we look at Progenity is doing the same thing. Had these big hills, and then pay attention to this price. Like this price over here is about a dollar down here, and now the OBV after we had peaked it at our top with the OBV going all the way up to 2 billion at the peak price. OBV all the way over here 1.66 billion. So we've only sold off by about 340 million shares on balance, but the price is all the way back down to a dollar at its worst point. Well, not quite a dollar, but close enough, right? So like all these trends, they're very interesting. They show some very interesting patterns, and that's why I'm pointing this out, because these algorithms that are working with these stocks that are using this that are using this technique do have a give. Like they do have limits, and they do have signs. They do have tells. And the one thing that's in common between them is that there is a supply and demand factor. And I don't think that any amount of market manipulation is able to get around that same fact that there is a basic supply and demand principle that's in play. If there are not enough shares available to buy, then they cannot just come up with them out of thin air. Yes, market makers can naked short, but they also have to provide liquidity for these. They have to find brokers that are willing to back up these phantom shares in some way, and there are limits to that. It costs somebody money. At the end of the day, somebody has to post up some collateral. There has to be some cash coming from somewhere in order to take on this risk. It doesn't just come out of nowhere. So let's head back up to AMC. Now AMC has had the most significant sell-off from, let's see, we'll mark the high at $45.95. Just say $46 for the sake of round numbers. At our worst trading price, the low was $13.40, and the OBV was all the way down to 4.3. We'll say 4.39 billion shares on balance. And now the price is immediately rubber banded up. So I'm considering this to be a signal, and I'm waiting for that OBV to break. The reason why is because if we were to chart this same pattern out here, so let's imagine that we were trading AMC all the way back from January, and we had followed it through all of this turmoil, and we were charting out until April, late April, early May, like first week of May. And we had drawn this wedge, and suddenly we had a breakdown. And this was actually the worst panic AMC's chart because we had finally seen some serious green candles, and then for the next solid 3 trading weeks, we were trading down below $10 again, and this was the worst price that everybody's seen for quite a while. The A movement was pretty well under full swing, and at that point when the OBV went to its lowest point, notice this big dip here, and then as soon as we started curling around again, we broke straight through that, and it did not take the price to move much. So that's what I'm looking for. That's what I'm looking for. And I've already opened up my position back up into AMC with everything that I've got because I see this trend, and I'm I'm getting paid here in a couple of days, so there's more money coming to throw into this. But right now, with AMC moving like this and the OBV providing me these signals for me to, I guess, a way to put it would be to solidify my convictions. I'm expecting AMC's OBV, and this is the trigger that I'm watching for. I'm not caring about the price right now. I'm not worried about it taking off without me because I know that the shares on balance have to go first. They have to. I'm waiting for the algorithms to make their buy in. And when they do this, they're going to try to do it quickly so that they can get ahead of all the other traders. This is either going to be shorts covering or I think that it has a lot to do with shorts covering, but I'm not certain that it's because of naked shorting. I think that what it really is algorithms are using shorts in order to sell off the price at strategic moments in time. Notice that the sell offs, if you look historically on AMC's chart in the intraday, the price always sells off during low volume hours. That's a technique that's well documented in stock market manipulation, is that during low volume hours, that is the easiest time to push the price down because there is a wider bid ask spread because there's fewer traders trading on that particular stock and in general within the market. And because of those low volume hours, they're able to attack the bid very quickly. And then if they are able to do it quickly enough, then other algorithms will jump on the bandwagon and they will start shorting the stock based on technical trading and technical indicators in order to push it down. But after they have exceeded their limit, I think that in order to continue to operate on the stock, the algorithms have to restore their supply of shares. They have to cover some of those shorts. They have to get some of that supply back. So at some point, they have to there's going to be dips and there's going to be swings, and you notice that like as soon as the sell off is like let's take this perfect this U right here, or this downtrend right here, just this spot between mid September and mid October. We were trading at $52.79, and the OBV is dropping. Watch the OBV and the price. It's dropping slightly, right? And at that point, the volume is the volume is decreasing at this point, and fewer people are interested in trading the stock. But as soon as it hits its lowest point, then the volume spikes and the price goes up by about 7%. And the OBV is restored to about a quarter of where it had been before. And then the OBV continues rising throughout the next trading week until it finally gets back to pretty close to where it was at this peak price back here at $52. But the price stays down below 43 is what it closed at. I have a feeling that this is part of the algorithm's game, is that they're trying to push the price down during low volume and then bring volume back into the stock so that more people are day trading it. They can get better fills and they can restore that supply. And then later on, as they're reaccumulating the shares again, they repeat this process, reaccumulate the shares, and then they're able to short it down heavily again and push the price down even further, then recover those shares back again at a preferred price without lifting the price so much that they actually end up hurting themselves. And that's all part of that. That's all part of that market manipulation technique with algorithms and computerized trading, taking an advantage of over retail traders and the fact that we just can't move and think as quickly as a computer can. And that is not all. I'm going to show you one more thing that I noticed, and I wanted to thank Cat Moores for entertaining this little thought experiment that I had come up with. I mapped out these timelines, we'll say, these rectangles. I apologize. My cat won't shut the hell up. Sir, 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 relax. Sorry about that. So these timelines that I'm looking at here are drawn specifically between the peaks of the squeezes. This one begins at the peak price after I noticed the OBV entering a big downtrend, because I feel like this is consistently a giveaway when there's accumulation and distribution happening in a particular stock. So I drew this channel, and I drew this time. I'm going to let my cat out. I can't stand listening to him just scream all day. I apologize. Cats are not very considerate creatures. So, back to what I was saying. These timelines that I've drawn are between the peaks of these big price moves. This one starts here at the peak price where the OBV hit its highest point, and I drew it to the peak of the squeeze because I feel like it's significant, right? And then I did the same thing, just peak of the squeeze to the next peak, and now I've drawn another one just based on the OBV trend. And if I were to stack these, okay. So these are our timelines, okay? So keep in mind that these are these are these are just timelines, date time ranges between the peaks in price on AMC's chart alone. And if I lay them side by side one another, this date time range from the most recent peak till the top of the second peak is very close to doubling the timeline. This was just from mid-November to the end of January. And then this was from the end of January till the first week of June. And then this one is from that point, June 2nd or June 3rd, until sometime in the future. And that's what I'm basing this on, is that the timelines are essentially doubling or slightly more than doubling between the peaks of the squeezes. This might actually be slightly more accurate if I were to draw these time ranges to the beginning of the next squeeze. If this timeline is actually like illustrating the beginning of the squeeze, if I were to double it from peak to peak, and then I multiply this by 2, then perhaps it's indicating the beginning of the squeeze, the date that it chooses to reinitiate the supply accumulation phase. And I cannot help but notice these patterns where the OBV is spiking up through its previous trends and the price is rebounding very quickly. There's not a lot of time between where we're currently at now and our next earnings, which I find significant. I have a feeling that our next earnings season is going to be big for AMC, especially with the success that they had in the first quarter of, or I'm sorry, the fourth quarter of 2021. So they're going to be doing their Q4 results here with this upcoming earnings call on the 1st of March. I believe this is the 1st of March, isn't it? 3rd of March, excuse me. So, like this is as tinfoil hat as as technical trading can possibly get. But I just can't help it. Like I'm looking at these patterns and they're just so consistent and they mirror each other so well. It's just really interesting. That's all I'm going to say. So y'all call me crazy if you want to. You know, heckle me for throwing out a bunch of hopium, but let's just watch what happens, okay? Let's just watch what happens. Right now, the OBV sold off really badly, and the last time that happened on AMC, where the OBV finally broke down below I mean, what can only be described as a wedge. The last time that it broke below, it rubber banded back through, and then there was a huge spike immediately after that. So I'm gonna look for that spike. And right now, I'm trading around. I'm trading a couple months out, just to give myself plenty of time. But I'm gonna look for this. I'm gonna look for when AMC is about ready to cross this threshold, and then I'm gonna do something stupid, and I'm gonna go ahead and I'm gonna buy some more calls and shares, with the theory in mind that this is the last chance I'm gonna get to get my AMC shares at a preferred price. So I'll let this sink in for everybody. Please ask me some questions if you've got some thoughts. I'm curious to curious to see what other people think. Um, I've shared this with a couple of my mods, and I hope they don't think that I'm crazy. But the more people that I show this, the more they see the patterns too. So I don't know if I'm just providing confirmation bias, but I don't know. It's really compelling. It's, yeah, yeah. What's up, Dave? Well, I suppose that's going to depend on. I suppose that's going to depend on broker availability. But let's go ahead and take a look at the Ortex data and see what happened the last time that AMC squeezed, because we do have access to that data. Yeah, I, it's a valid it's a valid concern, and I feel like they really do know how to manipulate human emotion. So let's see. Interesting. So utilization on AMC back throughout April was maxed out at 100%. Right now it's at 81%. And keep in mind, there have never been more shares on loan for AMC than there are right now. AMC's utilization's at 81%. Let's take a look at the free float on loan. Okay. We have we have 22.8 million free float on loan. So there's fewer shares actually being put out on loan than there were prior to this squeeze. So let's see. Oh, did not want to do that. Yeah, I have a feeling that you're right. And if we can get to a point where retail is able to predict this and make it so that their algorithm doesn't work anymore, I feel like they're going to run out of ammunition because no matter what they do, if they're doing some kind of an accumulation, if they're doing some, if these algorithms are creating a Wyckoff accumulation, because algorithms don't perform a Wyckoff. A Wyckoff is it's a manifestation of what algorithms are doing. It's a manifestation of trading in the market. And accumulation and distribution phases are very common throughout all stocks in the market. And you can spot them if you get really good at pinpointing all the signs and the symptoms. But these algorithms can't avoid leaving behind patterns. That's how I feel this is truly played out, is that algorithms are using human emotion to manipulate the price and take advantage and make money for market makers. But they are leaving behind patterns, and they can't avoid that. And I have a feeling that once we narrow down the data that gives away their next move, that's when it's over for them. And it's just a matter of being able to find it before they are able to execute. Right. So let's compare these Ortex charts so that we can explain to everybody what's going on. So I've got in light blue the estimated short interest percentage of the free float. So this is the number of shares sold short divided by the total free float. This is the estimated short interest, which is that is the total shares short against the stock, and then I have utilization here. Okay, these are all the significant metrics that we need to figure out what's going on to answer your question. Are they going to just short the hell out of it and push the price back down? I think they're going to try. And I think that this might be the big one. This might this might be their last attempt to really shove the price out down and get people out. This is probably where it's going to seem the bleakest. And I think that if everybody is waiting, like full Braveheart style, with the pikes in the grass and everything, and wait for the charge to come, then we actually we actually can nail them. So let's look back at December 14th of 2020. Utilization peaked at 100, and the short interest percentage of the free float was 74.48, which is massive. More than almost exactly 3/4 of the total stock trading in the market was sold short. And the estimated short interest was 42.39 or 42.4 million shares total. Before the squeeze took place, the total shorts, the short percentage evaporated and just vanished. The number of shorts, the number of shorts themselves continued rising. This is because of a dilution. What happened was warrants, and I believe it was Silver Lake selling shares of AMC, or this may have been Wanda. This may have been Wanda. I'm probably getting my dates confused, but there was a major investor in AMC that sold their shares into the market, and it caused the price to fall, and short interest rose very heavily. But what it ended up doing also is it supplied the market with real shares. that started trading on the exchanges. And because those institutions went straight to the exchanges, those shares became immediately added to the real supply, and it was not in the hands of market makers. And notice that the short interest kept climbing during this period. It dipped a little bit very briefly, but it started climbing right afterwards. And I think that was just day traders and swing trading shorts that were just like looking for, oh, look, there's a huge sell off. Institutions are liquidating their positions. This is a great time to short. And ordinarily it would be. But what I think it happened is that because market makers and brokers had to scoop up that supply, they had to go and buy them on the exchanges, and they had to go and buy those shares in full view of the national best bid and offer without going through internalizers. They had to go through the public trading systems. And I'm talking about this period right here. Yes. So from December 14th all the way to till January 18th. And then we finally squeezed on it was actually January 27th, but this one says 25th. The utilization had dropped down so significantly because real shares were added into the market. What I find interesting here is that shorts are still climbing. The percentage of the float is the lowest that it's been. This is all because of dilutions that have occurred throughout this entire period. There's been a lot of dilutions on AMC since Wanda liquidated their position, Silver Lake liquidated. We had several investors with warrants that exercised those. There was Mudrick Capital, and I think that AMC did their direct market offering at some point in May. All of these events caused a a large amount of shares to be added into the market. If we take away the utilization just for a second, the estimated SI of free float was slowly trickling downward, but it's kind of an illusion because the estimated short interest was more or less rising this entire time, especially here. The short interest kept going up, at least the net of it was, even though the percentage of free float kept dropping. What's up? I believe they can, or can't they? Oh, great. Yep, I see it. Go ahead and say something else, Kat, just to confirm.
Hello, hello, hello.
Okay, there it is. I'm sorry. For whatever reason, the sound driver crashed on my output channel, so nobody's been able to hear any sounds from my PC. So I apologize to everybody that was watching on YouTube. The question that Dave had asked was it was fundamentally Dave from the Discord, one of the mods, asked the question, um, do we think that because utilization is dropping and that there's several million shares available for shorting, that shorts might try to come in at a critical moment here with earnings coming up to try and push the price down? My answer to that was yes, but I think that it's a facade, and it's an attempt to try to scare more people out of the stock. And it's going to be important for us to really hold on to our convictions here, because the more people that hold and in fact buy throughout all that downward price action, the more supply will be denied from market makers and brokers to cover their positions. And that will only elevate the power of a squeeze that might precipitate as a result of that.
Do you think that as the implied volatility drops after earnings, as it generally does, if the shorts have pushed it down, that could be round about the right time to start getting options? What guess you'd look? Would you want to look for an increase in the volume or something on the OBV that you were saying before you start buying options?
What I might actually be looking for is what I might actually be looking for is just for it to cross those wedges on the OBV that I'm showing on my Tradingview chart. Oh man, I just realized that YouTube has not been able to see my Ortex chart. I'm so sorry, guys. This is so hard for me to for me to track. I've had this up, and this is what I've been talking about the whole time. I'm so very sorry.
You're just sharing one window, are you?
Yeah, I've been showing only one window at a time. That's why. This is okay. Everybody should be able to see the correct thing now. So I'm looking at this. This is the Ortex. Jesus Christ! What a mess. All right. Um, Cat, your video editing skills will be fantastic here. Okay. All right. I guess I'll kind of cover this again, because everybody's been missing exactly what I've been talking about because I'm not showing the correct screen. Ah, God. All right. Well, let's look at let's go back to this. No wonder nobody understood me. Okay, so December 14th. This was the either the Wanda or the Silver Lake dilution. I forget which one. Probably Wanda. And what that did was put real shares into the market, and then short interest kept climbing throughout that period. I suspect because they just thought that that was a good time to short the stock with a major investor liquidating their position. That's kind of a natural thing to happen in the market. Big investor says we're going to sell shares, and then the shorts get all they start drooling at the mouth, ready to take a position against the company. But as I mentioned before, what I think actually happened is because Wanda sold those shares directly into the market, they went through the exchanges and provided those shares straight into the market with full visibility to the national best bid and offer. And with those shares having to go through the exchanges, that price action was fully visible. It didn't go through the internalizers and the dark pool systems that were managed by market makers, hedge funds, and broker banks. And that is what may have catalyzed the squeeze back in January. What I was pointing out with the utilization is that the utilization was at its peak at that point, and the utilization dropped as a result of that share dilution that took place because it added more shares into the free float. So the SI over free float drops, utilization drops, and all of those indicators that says shorts are covering drops, except the actual short interest. The actual short interest is still there, and in fact is rising because it's just because you're dividing by a larger number, that larger number being the free float, that it looks like there's more shares available. And there are shares available to short, but the net short position is still present. Okay. I see a lot of people asking for some other tickers. I'm going to go ahead and complete this whole train of thought here, and then I'll go check out those other tickers. Okay, guys?
It's the one that sold on May 13th, 14th, 17th, and 18th.
Yeah.
Those were the days. I think those were the days you were talking about.
Yeah. May 13th and 14th. So these particular dates were when utilization was maxed out completely. And if I recall correctly, AMC was doing a share dilution at this point. They were doing their at the market offering, right? The whole at the market offering was taking place during this entire period where shorts were just hammering the stock repeatedly, and the short interest was like still super, super, super high. But immediately after that completed and all those shares were fully sold into the market, that supply had to be bought through the exchanges, and it caused utilization to drop. It caused the short interest to drop as the price was going up. I think that may have been shorts covering it as a part of that. and the short interest percentage of the free float continued to drop. So this was an actual covering. Like this was it wasn't a lot of covering, but it was covering. And it wasn't until like the actual squeeze took effect when some shorts doubled down at this point, and the short interest went from 74 to 84, 85 million shares short against AMC stock. Utilization was still maxed out. So it does show based on the price action that if the price rips, then we can expect it to get shorted again. But I think that if apes altogether continue to buy the stock during that period, then if everybody holds their convictions and simultaneously takes up their position again for or long on AMC stock at that time, then there's no way for them to resupply themselves. Those algorithms and the short hedge funds and market makers with a net short position won't be able to cover at a preferred price.
You overlay the failures to deliver on that.
Certainly. Let me clean up some of this.
Because you're saying there's no way they can, but obviously the market makers still can.
Yeah. The market makers have all kinds of techniques for doing this in order to take advantage of it. But it's their customers that pay the price.
Yeah.
It's interesting that the failures to deliver dropped off of the face of the earth. I think this is at this point, this is when they started using those flex options in order to control the amount of failures to deliver that were visible. Because at that point, they knew that that we were watching this, and also the SEC was most likely very pissed off with the number of failures to deliver. Like, what are you guys doing? This kind of activity with the failures to deliver exceeding more than half of AMC's total float. This is something that the SEC would have to step in on. And I think that they probably did, because it was so obvious that it made them look bad, and it called into question whether the SEC was doing its job. So that's just my 2 cents on that. I don't know if necessarily the SEC really still gives a shit. Compared,
I can't remember the proposals, but there are some. There's one recently that's, I think, in the comment stage about people having to report shorts, and seemed quite comprehensive about having to report that any way that you were short.
yeah, not having any reporting mechanisms for shorts has been the biggest. It's honestly like the greatest anchor around the U.S. stock market right now, because there's so little transparency into the shorts that nobody knows who's taking a short position. I really do wish it was more like the European markets, where everybody's position was fully transparent and there was no secrecy and backdoor deals that took place, because it just facilitates by itself, like shorting, the act of borrowing stock and not having full visibility into that makes no logical sense. Because if you're taking a loan against an asset, that has to be disclosed publicly, especially if that loan, that asset, is against an asset valued at like millions and millions of dollars. That has to be disclosed in virtually every other market that exists, except for when it comes to shorts in the US financial markets. It makes no logical sense. It's a loan, it is a borrowed asset, and that needs to be documented. It has to be documented somewhere, but it's not transparent enough for any enforcement to take place when fraud is happening. Anyway, I'll go ahead and conclude this, since you pointed out the failures to deliver, this rising ramp on both of these. I have a feeling that this is related to the amount of available shares in the stock. Just because with AMC back here, the failures to deliver was so high, it was more than half of the tradable float at that time. If we were actually to show the short interest of free float, yeah, the short interest of free float back here was 66.91%, and the exchange reported short interest on that particular day was 38 million. So yeah, about 50 million or 55 million shares in existence for AMC at that time. So the failures to deliver was about half. So about half of the stock failed to deliver. That's pretty ridiculous. I'm not sure what the failures to deliver are going to look like at this point, because now, since AMC has diluted so much of its stock, we're probably not going to see as many failures to deliver. There's just so much stock available that unless we start to run into another supply crisis between Gamma with options interest exceeding the free float or something of that nature, which the SI is 20.8%, which is really that's a huge portion of it. Like that's 1 in every 5 shares is sold short, and we've got 106 million shares out there for shorts that are accounted for. This doesn't account for naked shorts or anything like that. So we don't know how deep this rabbit hole goes. But anyway, so that's pretty much all the Ortex data. I don't want to spend too much longer on this. This was a lot to share. Go ahead and head back to Tradingview. Get everything back up for everybody. Okay. Okay, guys, you should be able to see my Tradingview stuff now. Sorry, just responding to something at work. All right. So AMC, just a last review of the technicals. The main thing that I was looking at here is this timeline between the two peaks of the squeezes. If you recall, I doubled each timeline, and it was pretty close to the full timeline of the next section of the timeline. It's such a weird thing to have to describe, so I apologize if that's a little bit confusing. But this first timeline between November 2020 and January, the January squeeze, that's the first timeline. Double the first timeline, and you get pretty close to the second timeline from the peak in January to the peak in June. And then if you double that one, then you'll get about where we are right now, or a little bit beyond. And what I find interesting is that these dips here, where the OBV is at its lowest point, and then it crosses back up above 2 trading weeks later, and then we squeeze from there. Very indicative that the same thing may be happening again. It's already happened 1-2 times, and now if it happens for a third, I am extremely bullish. AMC has just bounced off of its worst price that it's seen since May. We just came back from $14. This is probably the best price that we are going to get if retail jumps in altogether, all in on this right now. Shares, I'm trying not to fuck with options anymore, because options are super unreliable, and it's providing liquidity to market makers right now. But I do think that this is going to come back to bite hedge funds in the ass, and it's going to bite the market makers in the ass, because this downward price action has been all about getting people to sell out of their positions and get out. They are trying to scare people to get them out. If they cannot succeed in doing that, and it looks as though they have not, just based on the OBV, they didn't even get us back down below half of the on balance volume that we had seen when AMC was trading back in June above $70. And near as I can tell, they're trying to get the supply back to where it was back in May, early May, like April, May. And if I'm correct in my assumptions about their goals and what they're trying to accomplish, then I see no I see no way out for them at this point, except to buy back the shares that they have now sold short and start to recover their position. And if they're going to do it in order to restore full supply to themselves, then they're going to have to buy a lot of shares very quickly, and that has a natural tendency to lift the price. So right now, we're challenging $18. We're at the resistance of this falling wedge that we've been paying attention to here. Go ahead and zoom in a little bit to the 30-minute. Big cup, volume spike like no tomorrow. Price got slammed back down very briefly, but we're right back to where we were. I'm very convinced that this is algorithms trading on this. So I'm expecting the OBV to lift. We crossed on the MACD on the daily chart just today, and I'm having a feeling that we're going to have a very nice green close. And after today, I'm expecting the OBV to start crossing these. This is what I'm going to be looking for me to be convinced of a squeeze, that it's coming soon. Right now, I'm just buying shares. I'm just trying to accumulate shares as a long position. The fact that we've asking about a 16 gap fill, we might fill the gap. I don't know, but I don't think that's what's coming. Even if they could push it down that far, I will still close green. Like it would have to fall below $16 in order for it to be a red day and drive the OBV down below. This is accumulation here. I'm fully convinced of that. So I'm not doing anything. I'm buying shares, but I am not doing anything else. I'm not doing options. I'm not going to play those games until I see this OBV cross both these lines. So the bottom is at 1.46 billion, or we'll say, for the sake of being safe, say 1.5 billion on balance volume on the daily chart.
Hey, Demon. I have a question, if it's okay.
Yeah, who is that?
Landis it.
Hey, Landis.
What's up, bro?
Yeah, go ahead.
So, the tickers that are being asked is BBAG, PROG, and cents. Before that, the Fed notes are being released on the last week of February. The Fed notes are going to contain the balance sheet breakdown before the next press conference. Do you think, or do you see AMC being able to go against the market fears and push through as the markets start to bleed because of the balance sheet release notes?
That's a good question, and I don't know. I think that I have no idea. If the price action that we're seeing here continues on trend and it looks close to what we saw back here, then let's assume that what it took for us to get from this peak to the next is doubled. Then let's also assume that this price action on this U here that I'm looking at on the OBV where my cursor is also going to be doubled for where we currently are. Let's make the assumption that it's going to take us twice as long from the bottom to reach this top. So this was 1, 2, 3, 4, 5. It was about 13 days. So let's say 26 days from where we currently are. This will be easier with a line because Tradingview does this magical thing where it tells me how long a line is in days. That's February 24th. Is that about right on the timeline?
Right around the time.
Okay. So if this timeline, if what we saw back here in this period happens again, then what we would expect is for us to peak right around February 20th to the 25th, somewhere in that range. What day is the Fed meeting?
The notes are being released last week of February.
So it's going to be between the 20. Let me pull up my calendar.
Between the 20.
So the last week of February is it's actually the 28th is on a Monday. So are they doing it? They're going to do it sometime like between the 21st and the 25th, is what you're saying?
Yeah, that
Okay.
should be the timeline.
Okay. So then what I'll expect is for the Fed meeting notes to be bad. I'm gonna like I'm at this point trying to predict the future and like the I'm going to throw out all the disclaimers. I'm not a clairvoyant. I'm not a financial advisor. I'm not a soothsayer, and I cannot tell the future. But if we all know the market is not doing well, we know that the economy is sick as a dog, and things are not looking good. Okay, inflation's running rampant. The Fed is trying to keep things under control, and the market's in mid panic right now. If this plays out again, and AMC is going to squeeze, and we assume that what happened here is about to happen again, then right now we're at around here on this chart. And in a few days, we might expect to see a big green spike. This OBV will lift up above both of these lines. The price will trade, I don't know, I'm just going to guess somewhere between $19 and $27. Let's just throw these arbitrary numbers out here. Okay, this is entirely hypothetical. I'm not placing any price targets or anything, okay? Clearly not financial advice. I can't be more clear than that. But let's just assume that that happens. So at that point, AMC starts trading in the $20 to $27 range, something like that for the next for the first half of February. And then all of a sudden Fed meeting notes come out and the balance sheet is awful and the American economy is, everybody starts panicking, the market starts to take a dive. Initially, I think AMC will follow. Initially, the market will react badly to the news. People will panic. That's what happens. Nobody does good on a red day in the market. It's just, unless you're a short. If that occurs, then AMC follows the price. And then it will stop. If the OBV looks something like it does over here, then expect the OBV compared to the chart that you see here on that period of time to be somewhere in this range. Expect it to bounce and then start to recover again. That's my signal. What I'm looking for essentially is the spring on AMC. I have come to the conclusion in my search for Wyckoff accumulation that the OBV is the key because everything that Wyckoff has to do with stocks in the market and the accumulation phase has to do with finding that point where the volume comes back into the stock and the price starts to lift with it. And that is what the spring is on a Wyckoff chart. And when I look at OBV compared to other Wyckoffs that occurred in the past on other stocks, you could look at CAR, that's Avis Budget Group. You could look at Tesla. You could look at Microsoft early on, like back in 2009. You could look at Amazon in that time period. They had Wyckoff accumulations that occurred on their charts. And consistently, the OBV dip and rip, even though the price didn't move that much, that OBV dip and rip lines up with the spring on basically every Wyckoff chart that is illustrated in all like the stock school articles that you can find. So I've decided that OBV is the key to it. I feel like OBV is a very significant indicator here, and that's why this is what I'm paying so close attention to. So to answer Landis's question, if if the Fed meeting notes come out, I think that initially it's probably going to be bad because I don't see any way that the market's going to have a good day when the Fed finally comes out with the updates to the balance sheet, because right now the market's not doing well, and faith in the American dollar and the economy with inflation and the CPI just looking really bad. I don't think that the market's going to react well, and I think that AMC will briefly follow, but I don't think that it will be so significant that it will completely like wash out retailers. I think it'll look more like, oh, we had like several green days and we like moved up by 20-30% and then we gave back 10. I think that's more like what it'll look like.
Awesome. Thank you.
Yep, sure thing. Okay, I've been covering AMC for quite a while. Thank you everybody for bearing with me and getting through all the technical difficulties with showing my charts and things of that nature. Let's go and take a look at some of the questions that we've had. I'm going to check through Discord first. Is Beyond paying yet? It's a good question. I haven't looked at Beyond. My position, I haven't checked my position in a while. For those that aren't aware, we looked at BYND for a day trade. I shouldn't say a day trade. It was more like a swing trade. Oh, yes. Beyond Meat. All right. We called the bottom. Very nice. Okay. Oh, thank you, Mr. Boulet. Really appreciate that. Yeah, I haven't looked at my Beyond Meat position since yesterday. I saw that we were up, but now seeing that we've broken this resistance, very pleased with that. What I have been looking for is for us to fill the gap here between $80 and $95. There's a very nice gap to fill here, and I've set out my calls for let's see, I want to say I set them out for March. So right now, this is actually probably a good time to get out of my calls for a quick day trade, since we're up really nicely here. This is back to back 15% and a 4% gain day. So what I might do is I might get out of some of my calls here. But let me review my position really quickly just to make sure that I'm not that I don't already have a bunch of extra time. Oof! Wow. These are up 40%. I got my Beyond calls. This was a call spread for $100 and $120. So I bought a $100 call, sold a $120 call, and these don't expire until, where's my expiration date? March 18th. So I gave myself till mid-March. The monthlies on March. So not until here. So this is my expiration. I've given myself plenty of time. Let's go ahead and draw ourselves out a nice fib extension just to give ourselves a nice idea of. Oh, that is a fib retracement. Excuse me. It's like, what the heck is that? Okay. All right. So I'm going to go ahead and draw this out till, here's the 18th of March, or the 21st. All right, very good. Well, we've already broken the first resistance, so I kind of like that. We stopped at this resistance here. Our next resistance is right where it meets this wedge, so I might hold these until tomorrow. Yeah, you know what? I'm gonna hold these. I'm gonna hold these until Friday. because they don't expire until March, and I'm going to see how we react to this resistance here. I'm expecting Beyond Meat to challenge this resistance. I don't know if you can see, but I drew this falling wedge here, which this tends to be a very bullish pattern. These falling wedges tend to break out. Whoops, just scrambled my fib there. So these tend to break upwards. So what I'm looking for is for us to challenge this resistance here. And the reason why I want everybody to know this about me. I don't choose calls that I don't think will expire in the money. I choose calls and expirations where I think it's actually plausible that we can go in the money. I don't go for like these like dumb YOLO bets if I'm not fully convinced that it's possible. Beyond Meat has been so oversold since the beginning of May, and it reacted and rebounded to that price pretty aggressively. So I'm looking for it to do the same thing again here, since it's oversold really badly, and there's a gap fill here from $80 to $95, and then between and then between 95 and 100 there's another gap. So there's a chance for this thing to really rip. And note, we did the same thing with IBM. Thank you to the chief analyst Cap Morris for calling out IBM to the Hell's Trading Floor Discord. He spotted a gap on IBM, and it had broken I believe it was a 5-year selling trend. So IBM had broken its trend after, and it had bounced off of or it crossed on the 200-day moving average. These were all bullish signals that IBM was going to recover very nicely. So Beyond Meat showing a lot of the same stuff. Let's go take a look at the EMA. We're looking at the 20, 50, 100, and 200-day extended moving averages. I'm just going to... can I hide this? Can I make it transparent? There we go. That helps. That helps. Okay. So we don't need these super bright backgrounds here. Okay. So this red line here that we see falling down here, this is the 20-day extended moving average on Beyond Meat, and if you notice, we're way below where we crossed on back here on the 200-day. So this purple line is the 200-day extended moving average. The red is the 20-day. So this crossed below a real long time ago. And there's a chance that once we start crossing the 50 and the 100, that this thing will really start getting going. And there's a nice gap here. So these gaps from 80 to 100, that's a really good gap fill play. And we've been oversold for a while. Crossing on the MACD, RSI, coming off of oversold ever since December. So yeah, there's a lot of technicals in favor of this trade, so I went and took a position. Again, that was a vertical call spread, a bullish debit vertical call spread for 100, selling at 120, expiring March 18th. I'm holding those at least until Friday, and I will see how it reacts to this resistance here on the falling wedge and the fib extension. So I've got two technical charts that confirm this resistance here. I'm going to expect it to be some tough resistance. We've bounced off of it 1, 2, 3 times here just since we've started trading below $75. So that'll be a fun swing trade. Looking forward to that one. Let's see what other messages we got here. Just looking. I'm enjoying all the cat gifts. Not a dead cat. We need to get Trey in here. I feel like if I were able to show Trey what's going on with AMC and the things that I'm seeing. It might cheer him up. I heard about his cat passing away, and we actually just had a death in the family yesterday, here at home. So seems like a lot of people are having a rough time. In loving memory of Herbert the pug, official mascot of Hell's Trading Floor. That's okay. The Herbert the pug was the pet of one of the mods here at the Discord. That mod can feel free to step forward if they would like to announce themselves. But thoughts going out to Herbert, who recently passed away, and then also to Franklin, Trey's cat. It was Franklin. It was not Titan. Okay. So I think we covered Beyond Meat. It's time to go over all of our other favorite tickers. I have been yakking for a while. So BBIG looking very strong. I'm really happy about this one. I actually just bought back into some calls here not too long ago. I believe it was yesterday during work hours. I went ahead and bought back into some calls. As soon as we broke that resistance at $3.30, I knew it was time. So I'm really excited for what's coming next. BBIG is challenging its previous resistance and breaking through. Our next big resistance is at $4.30. And I'm seeing the OBV curling really nicely. The RSI came off of overbought and is starting to make another break upwards, and it's crossing the signal line here as well. So it's got some bullish momentum going on here. We might look for some consolidation here for a little while, but I'm expecting the OBV to start curling back upward. What I'm looking for is for the OBV to break above its previous high right here. So I'll go ahead and draw this line right here. This is what I'm looking for the OBV to cross. I'll go ahead and I'll add this alert for the Discord. Let's see, this was 2.5 billion. Okay. We've got that set for the Discord. And just so everybody's aware, these Tradingview alerts that we've got going here, these are only available to professional members and of the Discord. So if you want to get all of my trading alerts, every time I set an alert, I always set it so that it alerts the Discord in our TV alerts channel, and that will let everybody know what I'm looking at, and also provide context for my trading signals. So for that one, BBIG, I'm looking for the OBV to cross 2.49, 2.43, but like 2.5 billion. It's close enough, you know. Anyway, so my bullish signal is 2.5 billion on the OBV, and right now we got this really nice doji candle going here. I believe this is called a spinning top doji candle, coming off of this nice dynamite candle or a white soldier candle. What I'm looking for is for the trend to continue and to start breaking towards $4. We may still be consolidating, but as long as we get out of this price-bound range here, that's all I really care about. Nearest resistance on the short term is at $3.55 or $350 or so. looking to see us break that within the next trading week. Keep in mind, BBIG, got to be patient. We've got a lot of catalysts coming in here. There's reasons to be excited, but we got to give it time. Progenity. Progenity also showing some nice bullish signs. The OBV is starting to flatten out here. It is even curling upward just a little bit of gain here by about 2 million shares on balance. Not a lot, but the volume is still really low, so we don't expect the OBV to move too much. But the price coming up like this, it's a good sign. What I'm going to do is I'm just going to hold off here. This is a nice double bottom pattern right here, so I'll be looking to see if it comes back to challenge this resistance here. This is at $1.80 thereabouts. We'll go ahead and adjust that just a bit. So $1.80, that's our resistance there. And I'm also going to go ahead and draw another fib. I want fib extensions, not fib retracements. Give me my extensions. Okay. There we go. Okay. So we've got some resistance here at the 180 mark, and then the big resistance looks to be at about 230, 240, or yeah, 240. Sorry, for whatever reason, the ratio numbers were confusing the heck out of me. So I'm liking the look of that. Progenity, another one where it's kind of like sit, wait, be patient. MACD just crossed. RSI coming up off of oversold. Very bullish. OBV starting to lift just a little bit. Let's wait for some volume to come back in here. Keep being patient, but OBV, very bullish for the month of March and April. Senseonics. And if anybody's got any new DD for me, I have not been able to dig into Progenity very much lately. I've been super busy with work trying to keep control of everything and not lose my primary source of income. So if anybody has any news that I am not aware of, if you know about it and it happened within the last week or so, you probably know more than I do right now. Senseonics is doing really well. This is exactly what I was looking for on Senseonics. Also, this is the same sort of activity on its chart as with AMC actually. So yeah, it's a tall wedge, very tall wedge. There we go. So this is the same thing that I was talking about. Senseonics only squeezed a day after AMC hit its peak. So I'm treating Senseonics and AMC like they're twins, okay? And Sense is just the twin that came a few minutes after the first. So I'm paying very close attention to Senseonics. We had this big breakdown here below $2 and $2.10 was the low. So $2.10, and that was a gap down, and it came and ripped from there. I've got leaps for Sens. Like I'm good with Sens for the next 2 years. I don't care what happens for the next couple of years on Sens, but I am looking at this one for a potential squeeze. The FDA approval is a big thing for me. I am probably going to day trade this once I start seeing some bullish divergence on the OBV, and it looks like it may be coming here pretty soon. If the OBV on Senseonics crosses this line, which I'll go ahead and set an alert on this for the Discord also. And that is 500 million. Which that'll be fantastic. Yeah, Sensionics, if the OBV on the daily crosses 500 million, I'm treating that as my signal for some calls. Keep in mind, this is an untested trading thesis. I have only just recently adapted this into my my trading strategy for the short squeeze exempt thesis that I created quite some time ago. But it's worked out for me. It's been right. It's been right 5 times. So I'm pretty excited to adapt a new trading indicator to this. And if I can work this into our analytics bot, looking for OBV divergence or major deviation, then we'll adapt that into the trading signal here. Because this one's pretty exciting. This is a big exciting stock. Just generally, like the company, what it's doing with its continuous glucose monitor, is for me, like this is just something that's personally very exciting and cool for me. I enjoy what this company is doing. I'm a big fan of Sensionics' work. Huh, that's actually very interesting. I didn't realize this, but yeah, Sensionics. This is actually part of a much larger wedge. That's interesting. I just noticed this. Huh. Well, anyway. Let me go back here on catch up with chat. How you guys doing, by the way? If you guys are just joining us, thank you for jumping in. Really appreciate everybody showing up, showing out, bringing their support to the Discord for Hell's Trading Floor and also to the YouTube channel in general. If you can, if you want to share this, if you want to share this video, if you want to share this information and due diligence with your friends, go ahead and get the word out. We're doing all kinds of research on AMC, Sensionics, Beyond, Pfizer, Prague, BBIG, you name it. Do us a favor, hit the like button, and feel free to tweet out a link to this stream and any streams that we do in the future. You guys are what make the community great, and the more people that we can get on our side, looking for these plays and teaching everybody how to fish for themselves and how to play the market to their advantage, the better. Let me see what else is going on. Beyond is relaxing a little bit. I'm really happy that I bought some. That I was doing a little day trading on AMC also. I know I said that I wouldn't be buying calls. I'm not buying calls for major expirations or anything like that. I'm just day trading it because the momentum is starting to swing, and I was kind of betting on this move. So those are up 50%. Really happy with the outcome from AMC. I love what I'm loving what I'm seeing with AMC. AMC is making me very, very happy right now. I really want to see us break out of this wedge. This is a big area of resistance, and I don't know if you noticed, but the overall downtrend that we had been in for a long time is still very much in play here. We broke below it briefly, but the fact that we're now testing that as support, and we're trying to break out of this wedge, something's going to give here. And since the support ended up holding, I'm pretty bullish. BFRI made its move today. Update came out today. Also updated to professional today. Thank you, Mr. Head. Really appreciate that. Thanks very much. For some reason, I don't see your user as having upgraded. Let me know what's up with that if you don't get the upgrade or something like that, because I feel like that might be a bit of a concern. Let's go check out BFRI. We have been watching this one for a while. I actually got out of this position not too long ago. Oh yeah. Oh yeah. RSI came up from oversold, crossed the signal. MACD's about to cross. I like it. I like it a lot. There's no 200 or 100 day moving average because it's a new stock that hasn't been trading all that much. Remind me, I don't think that there are options for this particular stock, so I am I'm not expecting I'm not expecting options to be a good thing for this stock if it does come out. As a matter of fact, if I were trading this stock and I was expecting it for a squeeze, then I do know of some of the due diligence that was done on this stock. I'm not super knowledgeable in it, so what is to follow is not financial advice. But if I were to be trading BFRI for a squeeze, what I would be doing is accumulating as many shares as I possibly could, and then wait for that big move, right? Because that big move is going to make market makers jump in on this thing like a bunch of freaking vultures. And as soon as they do, I am positive what they're going to do is they're going to throw these options into it. They're going to take advantage of all that liquidity, and as soon as possible are going to start buying puts and selling calls and slam the price into the dirt. What I think that retail should do is do the exact same thing. Exhaust the liquidity, go ahead and make your own. If the price is starting to go up like crazy and you have all those shares, go ahead and sell some covered calls. Set yourself up for success. What you can do is you can actually do what's called you can do a collar strategy. A collar strategy is where you sell a call and you buy a put at the same strike price. What you are betting on is that the price will go below your strike price. Selling a covered call is pretty straightforward. You have to own underlying stock and you set a strike price that you like the price of. So let's just imagine that BFRI squeezes and you go ahead and, like, let's say we hit $20. Just an arbitrary number, not financial advice or anything like that. But let's say that we have a squeeze, BFRI hits that $20 marker, and options open up to it. Okay, so this isn't something that's been fully confirmed, but it's suspected because every time options open up on a stock that squeezes that has only historically been trading with shares, as soon as the options open up, then market makers provide liquidity into the stock and then short it into the ground. So take advantage of that. Say it goes up to that $20 mark, options open up, and the options are anywhere from like $1 to $40. Sell some calls. Sell some calls. You can go out the money if you want to, and you can go for really far out expirations if you want to, whatever you want to do. But sell a call and sell the call for in the money, out the money, whatever you want to do. But sell the call so that if that call expires in the money, then you sell your shares at that strike price. So if you sell a call at $30 and you end up being wrong and the price keeps going and that call expires in the money, then the worst thing that happens to you is you sell your shares at $30. Whoop-de-doo, you just sold a whole bunch of stock that you bought at $4 for $30. And take the other position and say it doesn't expire at $30 and you sold a call. And let's say that you also bought a put. And you could buy the put at $30 or you could buy the put at $10 or whatever, go out the money, whatever you want to do. But the idea is that when the price gets really, really high up here at $20, and I'm just going to keep all of these options at the same strike price just to keep things simple for everybody so that everybody can understand the principle of a collar strategy. What you do is you sell the call for $20 and you buy a put for $20. And then what you're betting on is that the price will go down, okay? And by doing that, when you sell the call at the $20 share price, and let's say you set the expiration out for like a month or 2 months. Let's do 2 months. Let's say that it expires March 18th. We'll do March 18th monthlies. So you sell your call and buy your put, and they both expire March 18th, and they expire at a strike price of $20. When you sell the call, you make money by the price going down because if the call expires out of the money, then you keep all the premium that you collected when you sold it. And then the put gains value the farther down in the money the put goes. So if you sold the call at a $20 strike price and the price falls to $19, then you make $1 per share. You exercise the put, and then you sell you sell the shares at $20 and you collect that profit as though you sold your shares at $20. So you're not missing out on that profit. And what you can do is if you hold this is what I do. This is kind of like a modified collar strategy. What I do is I buy my put when I see a huge move like this in a stock that I've purchased shares in, and it goes just bananas. I did this with SPRT, and when it went to like $52, and I was a bit late with setting this position up, so it was around $35, but SPRT, right around $35, I sold a call that was expiring in a month, and I sold it at the money, and I bought a put that wasn't expiring for 3 months. So I sold the call for 1 month, and I bought the put for 3 months. I bought a whole bunch of those puts. I bought way more puts than I had shares to liquidate with if I were to exercise all those puts. But what happened was because I sold those calls expired out the money, and SPRT was like down to like $13 by that time, and that call was next to worthless. So I bought to close that call, and if I had been smarter, I could have sold another call for the next month, and I could have sold that call for $13 strike price for next month, and I still would have had my put. I had all those puts that were available to me. And as the price kept falling, what I was doing was I was collecting income by selling that call that I was able to use to buy shares at the super, super low price that it was trading at $13. And I was able to exercise those puts. So if you were to trade this absolutely perfectly with BFRI and things happened exactly as I'm describing, and I'm not telling you that it will, this is not financial advice. We're just purely talking hypotheticals. BFRI, say you got 1,000 shares of BFRI, it jumps to $20. You sell 10 calls for $20 for 3 months out. So like June expiration, thereabouts, May or June. Sell the call for $20 strike, and you buy a put for $20 strike. And then suddenly the price falls down, and the call gets super cheap because volatility crush just destroys the value of that call option. You can buy to close that call, and then the price is trading back down at like $15 or $10 or whatever it is. You can sell another call, and in a worst case scenario, the call expires in the money, and and you get assigned, so you sell your shares at that strike price. That's the worst case scenario. And if that happens, like say you sold a call for $15 and all of your shares get sold for $15 strike, that's fine because you still got those puts. You got those puts that allow you can go and exercise those, and you just collected a bunch of money from those calls. You can either just sell the puts outright and collect the money profiting from those because they're currently in the money, they got some intrinsic value, or you can hold them till expiration if you think that the stock is going to fall some more. Or you can just exercise them right away, but it's actually, you would probably make more money if you just went and sold them. Because you have extrinsic value. If there's time left until expiration, you still have lots of value to work with. So you can just sell the puts for the biggest profit, or if you had enough money to buy the shares and you were near expiration, you could buy the shares at whatever it was trading at. If it was like $5, and you bought enough shares to exercise all of your puts, then you sell all those shares back at the $20 strike price, as though you sold at the top of the squeeze. So that's a little bit of an explanation of the collar strategy. I'll have to do a proper video on collar strategy so that I'm able to illustrate this a little bit better. Hopefully I can recruit a very gifted video editor to help me out with some of that stuff. BBIG breaking out of the wedge. Is it really? How about that? BBIG making money. All right. Yep, there was an intraday wedge on BBIG. Let's look at this on the 15-minute. This is what we would call a bullish pennant. So we had this move from bottom to top. This is the pole. And that's your pennant. You can either follow the bodies of the candles, or you can follow the bodies of the candles, or you can follow the wicks. I usually follow the wicks, but this is what a bullish pennant looks like. Nice big flagpole, and then there's the flag. That's the pennant, and that's what you're looking for it to break through that pennant. It's pretty much a big bullish move, a little bit of consolidation down to the downside, and then another move upward. There's your basic bullish pennant right there. I heard from Joseph that the proper way is to use the wicks, in which case you would be doing it just like this. And then you see, this is more like the traditional bullish pennant. So nice breakout. Looking to see if we challenge this next resistance on the fib. I got this set at 375. So nice breakout. Want to be seeing BBIG testing its previous resistance and see this OBV start to climb. That's what I'm really looking for. I want to see the OBV back up here if I'm looking at the 15-minute. Keep in mind, if you're looking at OBV, that the timelines strongly affect how it looks. The timeline has a pronounced effect on it because volume is pretty dynamic when you get further, or I should say volume gets really unpredictable when you go down to single timelines, because somebody might fill a single buy order that's 10 times what anyone else was trading throughout the day, and that'll cause a huge imbalance on the OBV if you're looking on the minute chart. So I don't use OBV on minute charts. I don't even use it on 15-minute charts, honestly. The farthest down I'll usually go with OBV is like on the hourly. Let's see. Any news of Jason? No. I still don't know what happened to Jason or where he is. I'm really sorry, guys. I know everybody, like, I know everybody thinks that I have like some personal relationship with Jason, but I don't. He reached out to me through Twitter one day, and we became friends uh, through the stock market. I don't have his phone number. I don't have a direct way to reach him, and I don't know where he is. I'm just as lost as everybody else is. I have no clue where Jason's at, and I'm really concerned for where he is and what's going on and why he hasn't said anything. But I just don't know where he is. Wow, BBIG is really starting to move. Is it possible to look at Pfizer? Yes, we can look at Pfizer. I've got Pfizer here. So Pfizer, I was targeting this one for March. Um, got some really nice moves on Pfizer. I think that there is actually a bit of accumulation going on, so it's in a slight downtrend right now. But I went and drew a. Let me go see if I can put this up on the. Why am I on the 3-minute chart? Good lord. Okay. So this is just a pitchfork. Looking for a rise. We're looking at a rising trend. That's mainly what pitchforks are for. You're just looking for, or you're looking for a trend in a particular direction, based on the lows and the highs of a stock, and if it's following a certain trend, like this one is, um, you're mainly looking to see the chart bounce between these ranges, and what you're looking for is if you see it bounce off of this top and then come back down and cross the center line or the center fork of the pitchfork, then that would be bearish and you would sell. Right now, we're bouncing off of the support. This is the support of the pitchfork, and if we are looking for a bounce here, then we'd be looking for it to cross this trend here. This is the center trend again. Crossing that, that would be bullish. And then any breakout of this top, also bullish. And a breakdown below, bearish. If it breaks out of the pitchfork entirely, then there would be a break of trend, and you would establish a new trend from that point. So at the moment, I drew this pitchfork and I saw that Pfizer was way deep into the blue territory that you see here, and it had already bounced at that point, so I expected it to break this resistance. Took my position. It has broken it. It's now reestablishing support. So once it confirms this support, I'll be looking for it to make another move. And I've got calls for Pfizer for $60 in March and $65 in April. Let me double check my positions. Oh, I'm sorry, $60 calls for February and $65 calls for April. So I was right on the Aprils. I guess I took a bit of a gamble with these $60 strikes here in a couple of weeks. We'll see what happens, but if those don't play out, I won't be too upset. It wasn't a whole lot of money. It was just a small day trade. We'll see what it do. Okay. Let's go take another look at Progenity. I see the price rising above 160. Looks like it was getting ready to break resistance here on the 15-minute chart. All right. Yeah, we're moving on an uptrend now. Now we're going. Now we're going. Here we go. We're right at resistance here. Right at it. And 165 is very critical. I want to see us break 165. This is a big area of resistance here, 165 to 180. This was an area that we had traded in for a very short while, but we basically, we were trading above 180, and sure enough, my prediction that it was like this was going to be the bounce. It's like, you're so funny, and then it got slammed down straight below, and it broke right through that range. So this I'm considering a gap. If we can break 165, I'm looking for it to break above 180, and that'll be the run there. Let's see. We got a few more like this. These big downtrends here have been like perfect lines, basically. Just taking an example here. These exactly perfect bull channels. Perfect bull channel. And it's a short timeline, to be honest with you, but like this exact channel is a little bit too perfect with the volume spikes coming in to reaccumulate and then another set of shorts just coming in just to slam it again. Seems a little bit weird. It's some very volatile, choppy action. So, I don't know. I might just be being biased and a bit paranoid, but in any case, Progenity just came off of a double bottom with a higher low, so this is a bullish signal right here. Little jump up by a few cents, establishing higher lows as it's going up. So this resistance is what I'm looking for. Let's go see if it breaks out above 165. Let's go, Progenity. What is my take on CEI? If I remember correctly, they did a couple of reverse splits, quite a few reverse splits. That's not a good sign for a company. And as much as I don't want to talk smack about another meme stock, CEI just doesn't quite seem as it doesn't quite seem like it's resisting the trend like others are. We'll take a look at Camber Energy. Somebody has some due diligence in the live stream chat, if you wouldn't mind throwing out any information that you have for me on CEI, just because I don't want to talk too much about something that I'm not particularly invested in and have no. I don't have the best knowledge on this stock. What I will say is, just looking at this chart, I see a very clear falling wedge, and that is a bullish pattern. This falling wedge is a bullish pattern. So what you're looking for is for it to break out of this wedge to the upside at any point. It could be this week, like it could even be today, given where it's located on this wedge. But don't know. 10K extension to February 18th. To February 18th. I see. So you want to do a trend-based fib extension. I'm guessing from this low to the peak. This is going to be a hilarious fib. Okay. So there's a lot of room. There's a lot of room. But I do agree with the chart. There's a lot of selling here. There was a gap up here from $1 to $1.50. So, and I guess I can't be I can't laugh too hard because it's selling below. It's selling sub $2, so the moves are gonna look like a 10-cent move looks massive on this chart. Oh, extension on the 10K filing. I'm sorry. Thank you, Numbskully. I appreciate it. They got an extension on filing the 10K until February 18th. Okay. I don't know what's in the 10K. But if you have some details on any of that, that would probably help. I do like the fib extensions though. I'll happily draw these anyway on any chart in particular. But thank you for clarifying that you were talking about the 10K filing. Now I feel stupid. Let's go back to Progenity. Oop, 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 oop. Is it going to do it? Is it going to do it? Is it going to do it? This is like the most exciting 5-minute chart I've seen in a while. Progenity is just getting closer and closer and closer. Come on, man. Do it. Just break the ceiling, man. What's that? We had 153 people in here for a hot second. Now that reminds me. I haven't even talked about our. I haven't even talked about our partners. This is not a sponsored video, but Hill's Trading Floor has established some very healthy partnerships with some new friends. Currently, we have Ortex, our short interest analytics platform, which, if you're not familiar with Ortex has probably the best access to all short interest data in the markets. They have access to more than 85% of prime broker data in the globe, which is something that, to my knowledge, no other provider can boast about. On top of that, they have access to really great trading signals and options data, which they provide for $70 a month. If you are looking to get a discount with Ortex and try it out for yourself, you can click the link in the description of this video to get a discount on Ortex. And all you have to do is just go sign up through our affiliate link in the description of this video, and then also send an email to support@ortex.com and just mention Hell's Trading Floor. Let them know that you're a member of our channel, our community, and our Discord, and you can get a discount for Ortex on your first month just to try it out. And then also we have Tiblio, our options picker partner, which Tiblio, if you're not familiar with, has access to a fantastic bot that highlights unusual options plays. Theirs focuses mainly on deviation and major unusual activity in the options interest for any number of different stocks. But they focus on all sides of the market. And they also provide some very nice strategies and a trading journal for you to track your trades on plays in either direction, either for bull squeezes, bear squeezes, or even selling credit spreads for puts and calls. So if you're looking to break into options and you want to give yourself a nice edge, Tiblio is an awesome platform to get hooked into. And if you use our affiliate link with them, then you can get 20% off of your first month. And then finally, we have Tradingview, which if you're liking the charts that you're seeing here, we have an affiliate link with Tradingview. Unfortunately, Tradingview doesn't offer us a discount, but if you want to help support the Discord and you want to help support what we do here at Hell's Trading Floor, you can use our affiliate link when you sign up for Tradingview to get access to this charting software, and we will get a small chunk of your of your monthly subscription. Which, if you were to do that, I know myself, the mods, and the staff at Hell's Trading Floor would be immensely grateful. So if you're looking to support us and what we do and give yourself some superior trading software, ever since finding TradingView, I've absolutely fell in love with it. I can't speak highly enough of how amazing this trading software is. And just the number of indicators that it provides is absolutely the coolest. like such as the squeeze momentum indicator, which I've truly enjoyed this one in particular. The squeeze momentum indicator has been fantastic. So as you can see, we've had some patterns developing in Progenity with these major sell-offs over the past several months. From July till September, it was in quite a downtrend for a while, and then all of a sudden started picking up steam. And it looks like Progenity is starting to come back off of its lows now. So this might be an excellent buying signal for you if you were looking to get access to this. And this isn't the only indicator you can use. There's plenty of trading indicators that are coded by other members of Tradingview, and also Tradingview Ideas, which is a kind of a social media platform hooked into Tradingview that allows people to share ideas of stock plays that they're making in the market. So if you want to talk to somebody else other than myself, then you can get hooked in with some other excellent traders with more experience than I have in the market through TradingView. There's our daily plug. Oh boy, now that's a squeeze. I'm just kind of looking back in time at the squeeze momentum indicator with Progenity. It's actually pretty cool. This is back when it was selling at like sub $1. Big breakout, little ebbs and flows. It's pretty nice to be able to give yourself this kind of an edge seeing these indicators. It illustrates the momentum and price so well. I really do love this indicator. It's very nice. And what I've found using this indicator is that the longer the downtrend and the longer that consolidation, the bigger the rips are. So thinking about like just this one for example, the downtrend from $4.50 all the way down to $2.70 for Progenity. Just days, just literally, in fact, hours, just hours before it went straight to its peak at $6. It's a really helpful indicator. I do like this one. Let's go take a look at their 15-minute chart again. Progenity, you're teasing us.
Is that what you're saying then?
What was that? What was that, Dave?
Saying prog's about to rip.
Maybe. Maybe I am. Maybe I'm not. I don't know. Looks like we're going into a little bit of consolidation. We're about to cross below on the MACD. So if you're day trading this might be your exit signal here. But for me, I'm in Progenity for the long run. I'm not day trading this one. I'm just accumulating shares. Right now, this is the best price that I've seen on Progenity in quite a while. The fact that we got all the way down to $1 and I was able to scoop up some shares at that, I was very happy about that. Selfishly, I know everybody wants just to see it rocket through the stratosphere, but I've been enjoying seeing. I've been enjoying being able to collect more shares for my moon ticket. Progenity is a company that, regardless of any squeeze, I feel very firmly is one that's going to be trading um, tens to 20 times what it's currently trading at. I mean, honestly, I think that Progenity is going to eventually go to be trading at triple-digit prices at some point in the future. I'm super excited about Progenity mainly because of the markets that they're breaking into. So those of you who have been asking me for more DD on Progenity, there's really not been any changes, but I can talk about some of the things that I've been talking about before. With Progenity being, with it being a novel biotech company, they have the only rule out test for preeclampsia, which is the second leading cause of maternal death in pregnancy of nursing mothers or pregnant mothers, I should say. Preeclampsia is basically a blood pressure condition that can arise during pregnancy, especially during labor, and it very very much is an extremely dangerous condition that it's as I said the second leading cause of maternal death, but one of the leading causes of mother and infant mortality during labor. So the fact that Progenities has created a working rule-out test to discern whether or not somebody is at risk for preeclampsia before they are like even in their third trimester is that's very significant, and that's a 3 billion market. So that's a huge untapped market. They've got the only rule-out test for that particular condition. And just in general, like that's an excellent thing for human life and the advancement of the field of medicine. Considering that preeclampsia doesn't manifest itself until during labor, where it's the most dangerous, and doctors never know if it's coming. It's something that you have to be ready for, and it doesn't happen in a whole lot of cases. But when it does, it's disastrous. It happens fast, and you have to react quickly. And if doctors know that it can happen, then they can make an effort and take steps to prepare for it. Savvy Trading just said in the Discord that his wife had it, and it was a really scary time. I can only imagine. I don't have any children. My wife's never been pregnant, but we've been thinking about it, and it's kind of a scary thing to think about that something like that can just happen to you. Um, I didn't know about it before I started researching into progenity. I'm like, what's preeclampsia? And the more I dug into it, the more I saw like how serious the condition was, but also I saw how much of a need there was for Progenity's product. And that's just one product. The other two are the DDS, the drug delivery system, and the OBDS, the oral biotherapeutics delivery system. The DDS is a more effective method of basically an electronic smart pill that's able to contain a payload of medicine that it can travel through the stomach and survive the stomach acid and then deploy the drug directly into the intestines where it's digested and processed into the blood. If there are certain medicines, and there are certain medicines that are less effective because the stomach acid destroys it, the whole purpose of tablets is not to deliver it to the stomach, but it's to get it past the stomach and survive the stomach acid, and then deliver the drug into the intestines. With a smart pill, it can easily survive the stomach acid because it's non-organic. It doesn't break down in stomach acid when it's attacked by it. And then all it does is once it gets to the intestines, it just opens up, delivers the payload, and then you just poop it out, and that's it. With the oral biotherapeutics delivery system, that one's a little bit more complicated, but that's mainly a method for delivering drugs intravenously, but in the form of a pill. And some of you might be thinking, like, well, wait a minute, intravenously through the veins, how does that work? So you take this pill that it just like the other one, it passes through your stomach and goes into the intestines. But what the pill does is it opens up and it deploys a system where it kind of latches into the wall of the intestines, and then it has like a very small microscopic needle that it pushes in through the wall of the intestines, and it delivers the drug, and it's processed into the body that way. And it's a super cool system. There's illustrations and videos of Progenity's drug delivery system that are out there. If somebody wants to link a few of them in the YouTube chat and in the Discord, if some of the mods might be able to help me out here. It's a really cool system to actually watch demonstrated in action, and it's an amazing product. I really do think that it's going to be monumentally life saving, and it will change the field of medicine forever, because it can deliver drugs like Humira, the world's most profitable drug, which nets AbbVie, the owner of the patent and producer of the drug, more than $30 billion annually. And it also has applications, although it has not been tested, for insulin. So if you're type 1 diabetic, maybe in the future, Progenity might be developing a pill that just delivers you your insulin via pill form instead of having to inject yourself. Wonderbraun asked about Sens. Yes, I did talk about Sens. Sensionics was starting to show a nice bit of strength and a breakout. I'm looking for the OBV to cross above this level, which is at 500 million shares on balance. I don't think that the price needs to travel that much because once the volume starts coming into the stock, I think it'll cross it very quickly. I will be expecting for Sensionics to break that line on the OBV, which you may not have been here for the talk on AMC also, but we were drawing this out on AMC too, and this one was doing the same thing. So AMC has, I believe it's 3 billion or 2.5, I think 2.5 billion on balance shares. So if the OBV crosses AMC on the OBV at 2.5 billion shares on balance, then that would be my bullish buy signal. Sensionics, I'm not sure that this is going to be it, but I'm waiting, just being patient so that I don't rush into a trade and then have the rug pulled out from under me. I'm waiting for more confirmation before jumping into before I go ahead and jump into my swing trade strategy, if you will. But I am liking this. It's really nice, very bullish, nice breakout. Got back into this this triangle here, and broke straight through this resistance at $2.70. So really, really good, very nice. I'm extremely bullish on Sensionics. I'm not on the up and up with their options at the moment. I might have to go and get some options data on some of these. Let's see. Got some people looking at the SPY. Oh, we were talking about some overnight reverse repurchase agreements with Johnny Love the other day. Let's see. What was I about to look at? I was about to look at the SPY. All right. So the SPY is doing all kinds of interesting things. That's the monthly chart. Let's go to the 4-hour. Yep. Okay. Okay. SPY. All right, double bottom. Here we go. So for the short term, the market looks like it's trying to make a turnaround. We established a new higher low here off of this bottom wick of this candle at $4.28. If the SPY is going to make a run at this previous support line, this is the trend line for the SPY, and every time that it's crossed below it, it's since rebounded. It's been a long time since we came off of that. Oh, this must be something else. This was a supporting line from like the monthly or something like that, so that's my bad. But anyway, if the SPY is looking to bounce here, then we might see a similar move as to what we saw back here in October. So we'll see what happens. The market is pretty uncertain, pretty volatile right now. Getting ready to cross this support right here, or resistance, I should say. Let's see what happens here. Somebody grab puts on the SPY. Are we getting some unusual whales volume on this right now? If anybody's got access to unusual whales and wants to feed me some stuff here, some screenshots in live stream chat, I will look at that stuff. You guys go ahead and throw down whatever you want. I'm always interested. CCI's breakout looks like it's going to come in any day now. I'm not in CCI personally, but I wish the best for everybody. CCI, I don't know anything about it as a company really, but I do know that it's a squeeze stock that a lot of people have been looking for to make a move. See some people talking about BKKT. Can we look at SDC? Okay, we'll take a look at BKKT first, and then we'll look at SDC. BKKT is getting ready to challenge some resistance here. It's looking like it's making it's looking like it's making a U now. Let's see where we're at. Yep, consolidating at 469. Nice. Breakout above 485 is what we're looking for. Okay. BKKT broke out of a bull channel just the other day. How about that? Let's go ahead and draw this channel out. Pretty clear bull channel.
There's lots of bearish trades going on.
Yeah.
Options for whales.
Was that on the SPY?
Yeah.
Gotcha. Thanks for the heads up.
SPX actually, but
XBS. Okay.
SPX.
Oh, SPX. Gotcha.
A lot of floor trades for several million.
Okay. Oh, wow. Those are some big prints on BBIG. When did that happen? Today? At 10:30 Pacific time. Those just printed. No shit. Okay, everybody. So we got something big on BBIG that just happened. Thank you for this screenshot, JRuff. Really appreciate that. So we got 320 call 300 wait a second. Oh, I misread that. I'm sorry. I misread that. That's my bad. Sorry, guys. I was looking at this volume or the unusual whales prints from BBIG from a user in the Discord, and I thought that I saw a K next to the premium. I'm sorry. I thought that was like 300,000. Not. It's just like $300. I apologize.
That would have been nice.
It would be nice. Yeah, very low, very low premiums at the moment. Okay. So let's not jump the gun. Let's not get too ridiculously excited. It's looking nice though. It's looking nice. The way that it's moving, this breakout above 350, I'm pretty bullish. Nice break of that resistance there. $355, clearly an area of resistance since we've been consolidating here for the last 45 minutes. Let's look at this on the 5-minute chart. Oh yeah. We're right at that resistance. It's really trying to break through. I'm pretty excited. Let's see what happens. BBIG is showing some serious strength right now.
Obviously, just as I want to enter a trade, my workstation hangs up.
Okay. So on the daily, BBIG starting to show the MACD getting ready to cross. RSI is pretty middle of the road. Seems like it cooled off big time off of this run to $5. So let's see what happens here. BBIG is starting to show some real strength. I'm getting pretty excited here. We broke out of this rising wedge pattern, which I had drawn some time ago. Well, a couple days ago. Yeah, I drew that wedge like Friday. Yeah, that would have been Friday. Yeah, broke out of that rising wedge and kept on going through that resistance. We'll look to see what it does in reaction to 350, but I think we might be seeing some consolidation on BBIG here for a hot minute. If it comes off of 350, then what we will be looking at next is for it to stay above 327. That's according to this Fibonacci trend extension. So we'll see what happens here. If it breaks out, or if it gets rejected and then bounces off of 327, 325, 327. It's fighting for it. That is a lot of deep in the money puts. Thank you for this. This is interesting. J Ruff, thank you again for this unusual whales data. So I'm going to have to show this on stream for everybody so that everyone can actually see this. Let me put this up for everyone. Currently still got my my Ortex data up. 2 seconds, everybody. Yeah. So shout out to JRuff84. Thank you very much for putting this up here. This is all of the flow for above $100,000 on BBIG. Almost exclusively bearish flow. Everything's expiring many, 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 many days out. This tells me market makers.
Sorry, I think that's Ford.
Ah, Jesus. God. Thank you anyway, JRuff. So this is Ford's flow. I was mistaking this for BBIG again. What is wrong with me?
It's been a long day at the office, man.
all of 2 hours at the office. All right. Well, we're here anyway. We'll take a look at Ford, because why not? We came this far. Ford's apparently nobody's happy with it. It should have been my first clue that I saw a $3 million print on puts for BBIG. If there was a $3 million print on puts for BBIG, I think we'd be a lot less happy. Go switch my windows again. Oh, you know what? Somebody had promised. I had promised somebody we were going to look at SDC. Wow, it's a lot of. Wow, Ford's beat the hell down. Is everybody that convinced that Ford's going to be trading below $20 in the next 3 years? Some of those prints were for leap puts out for 2 years. There's quite a few of them for the next 72 days. So that would be April monthlies or quarterlies. Yeah, that's a quarterly expiration. So, well, I don't know. It's in this range of consolidation. It broke out of it for a couple of weeks, and then it fell back into it, and now it's back in consolidation again. So I don't know what Ford's doing. I'm not going to trade it. It's not fun enough for me. Oh, one more from JRuff84. Thank you very much. It was a bullish bet selling $8 puts that are expiring in 17 days. So that's February 18th. Somebody sold $8 puts for $1.2 million in premium. If those puts were to expire in the money, then that person would be obligated to buy shares of BBIG at $8 for each contract that they sold, which was 2,600 shares. So somebody is guaranteeing someone the right to sell them shares at $8 per share for BBIG to the tune of 260,000 shares. So 260,000 shares worth of puts sold. That's a very bullish bet. It's quite a lot of premium that somebody's stacking up there. They would not be able to post that. They would not be able to post that if they didn't actually have the cash to put up against BBIG to buy those shares. Because remember, when you're selling a put, you are selling the obligation to. You are selling somebody the right to sell you shares at $8, and you are obligated to buy those shares for $8 if that's the put that you're selling. Ford just had a huge candle. So it did.
SPX is a massive floor trades telling puts.
Huge floor.
Some just sold like 24 million, 23, 24 million dollars worth of SPX puts.
No kidding.
A floor trader.
Interesting. All right. So you guys are getting this data live. Apparently, floor traders are really liking what the SPY is doing. SPX is the SPDR index. SPY is the ETF that trades against the SPDR index. What are the prints on that, Dave? If I were to consider a day trade on that, I'm trying.
These ones for May. There's some ones for this month just come in, some floor trades, which are actually bullish. So they ate it. Yeah. So the closer dated ones, floor traders seem to be more bullish.
Very interesting. What's the days to expiration on that?
The shortest ones are 17 days to expiration. They're all bullish.
So February 18th monthlies.
Yeah.
Okay.
Three trades adding to about 3 or 4 million premium.
Okay. So a whole bunch of puts being sold. Interesting.
March ones are bullish as well.
Very interesting.
Then they seem to be getting bearish as they go out to May and
I do see the open interest on these. The puts, there's a lot of puts that stand to expire out the money on February. That's a lot of premium to burn.
A load more just came in. A load more floor trades, bearish. All like $20 million or so bearish bets.
I'm not surprised with it being the SPY. $20 or $20 million on the SPY for anything is pretty much par for the course, I guess.
that was about 20. Well, it's probably more than that. It's about 20 trades of $2 to $6 million premium, all bearish within a couple of seconds just now.
Jeez. All right.
It seems to be people think you're mostly bearish in the short term.
All right. Well, y'all can trade it as you see fit. Be careful. BBIG is getting quite a lot of bearish premium. A lot of puts being bought, a few in the money calls being sold.
Also, I think the 1.2 million put that we saw earlier sold might be part of a multi-leg strategy.
A multi-leg strategy. Gotcha.
Yeah, so let me just find it.
A lot of these, if they were sold at the same, if the calls were sold and the puts were bought at the same time, then these would be modified caller strategies. Most of them.
It's hard to tell when you get like 20 or 30 come in within the same second.
Yeah.
That's probably not a strategy, I'd imagine, with that many legs. It's probably
Hard
not
to
one
tell.
strategy.
I mean, it's still bullish overall.
Yeah. Yeah, flow is bullish overall. I see that most of these puts that are being bought at $9 strike are set for 45 days till expiration. Man, I'm like all mush mouth today. I can't speak. Okay. Let me see.
What's SPXW? Is that one of the leverage ones?
Don't know.
XW.
It's not there on
Hmm.
It's not there on Tradingview. I can't find it.
It's not in direct brokers either.
PFE is doing pretty good. All right. I gotta check out. Somebody has been waiting on SDC forever, and I keep getting distracted. I apologize. Oh wow, look at that! And SDC moved. How about that? To Paul Nguyen, I'm very sorry, and I apologize. I'm not very good at pronouncing Vietnamese names, and I'm also sorry if I got the nationality wrong. But in any case, SDC looks like it is moving strong. The last several days on SDC looked pretty good. The OBV is beginning to curl again, so I'm actually interested to see how it reacts to. Let's see. Yeah, OBV was moving down with it, so OBV may not be the greatest indicator. It may just be a traditional momentum indicator at this point. With SDC having sold off from 1589 to currently $1, and $1.91. So if SDC is trading at 278, I would want to see it break out of this. I would absolutely want it to break this trend. This is a year-long trend that it has been in for a long time. So I would be very hesitant to take any position in this without confirmation that it broke this trend, because it is a bull channel, but it's a year-long bull channel. You don't know how long this will go for. It probably won't go on for much longer, just because you can only go down so far. The stock can go to zero, of course, so you can end up at no value, and that's as low as you can go. But I am aware that SDC just made some fundamental changes to the company. They've cut some expenses and tried to do what they can to restore themselves to profitability. So I am aware of the changes that they are making. Whether that comes out to amount to something that ends up saving the company remains to be seen yet. But I will be watching this one. I will be watching it. If I had BBIG and Prague options for February 28th and are in profit, would I exercise or hold a little longer? Liberty Holdings. Out of curiosity, if you don't mind me asking, could you tell me the strikes on those? Because depending on your strike, I might change my answer. And also, if your plan is to, oh, somehow we lost access to the YouTube chat. Looks like we lost access to YouTube chat. I'm not getting any feeds, so I'll tell you what. We'll go ahead and we'll take a break. I'm going to end the stream here, and I will try to come back later, but I need to check in with work and make sure that I'm not missing anything important. So I'm going to take a break here and close the stream. Thank you guys so much for tuning in and talking through these stocks with me, bringing me some new DD. Always appreciated.